80 limited. 80s limited. Hey. Question better amount of it. Okay. So we paid AP Limited how much? But they were having a cash of how much? So technically, we paid how much? 260. Are you getting the idea? There are two ways to do that treatment. The first way is that you can decide that you pretend with the cash, so that you go and add their 200 to the cash and cash equivalent, and then you get a closing cash and cash equivalent. Or you can go for calculating the 12 workings called net cash on acquisition. Net consideration. Net consideration simply means you bring the consideration transferred, which was 460, then it less what? The cash of the subsidiary, 200. So technically, the cost of this investment is only what? 260. So this is what you would take into finance.
So
yes. It is a what you are way. That's a wunya way. That means technically you paid only what? 260. And that's the acquisition. That will go to the investing activities. I am done. Let's look at the cash flow statement.
So what of the one that the finance cost that you're talking about?
Which finance cost?
You're talking about it.
So he asked a question in relation to the finance cost. So what question would you ask? What question did he ask? No, he asked a question which is peculiar to him in relation to how the finance cost will be treated. And I mentioned that the finance cost could be treated by adding and subtracting at the same time. So we can decide to ignore, which is what I'm going to do here. I'm going to do that same thing here. I'm not going to bring the finance cost effect because I'll add and what? Come and subtract. I won't bring it at all. So consolidated statement of cash flow.
But for maximization, they won't give any max.
No, please. No, please. Sometimes, subconsciously, I don't know, financial reporting and corporate reporting, people think the more item you bring, the more marks you take.
Yes,
I'm having the same thing with the financial reporting class, and people want that everything should come. I say no, it's not everything that must appear there. Are you getting the idea?
Yeah, I.
What's I? Yeah.
So we'll not bring the gain again.
You won't bring it how?
The finance cost already includes the gain on the health facility.
And you know that is a non-cash item, right? So what are we supposed to do?
I'm not talking about the treatment.
But what are you
I'm
talking
just
about?
If the finance cost comes from, if it already includes the gain on the health facility. Yes, the finance cost is 450. And it already includes the gain on the health facility for trading, yes, which is 400. I mean, it's already included there, so we'll not shoot this one. Or
You don't treat it how?
we treat the difference. Like difference and bring this then over.
You don't understand what you are saying. What you are trying to say is that the finance cost 450 there includes two things. The interest you are paying on your loans, and then the gain that is coming from trading assets. Now the gain that is coming from trading assets is 400.
So definitely
but the finance cost is 450. That means the interest is what? 50.
Yes.
So it is this 50 that you're going to add and you're going to be what? Subtract. But you can decide that this 50 you're not going to add, you're not going to subtract, because at the end of the day, it's the same thing and it will what? Cancel out. That is my concern. So this 400 is a gain. You have to subtract it. Are you getting the idea? Because, hey, did I say subtract? You need to what? Add it back because it was subtracted. It's a non-cash item.
No, it was a gain. We added. So we subtracted.
Right, we added, so we're going to subtract it. Yeah, so that is it about that. So that's it. So let's go for it and see how we go about a cash flow statement. So in my cash flow statement, I think I'm going to do 2 cash columns. So my starting point is always going to be cash flow from where? Operating activities.
Hey, our next proposal.
So cash flow from operating activities, and we are going to start with profit before tax. What is the profit before tax?
It's 1990.
1990. Then we do the adjustment for non-cash item. Yes. What are the things for the adjustment for the non-cash item? First, goodwill. Impairment of goodwill. What workings was that? How much? We added back because it was subtracted. Share of associates' profits. What workings was that? What workings was that? Can I have the workings for the share of associate profit?
Workings 5.
How much is it?
300.
How much?
300.
Oh, are you serious?
The dividend.
The associate profit we had was how much? Was it not 500?
Sorry.
Oh, Charlie. Oh, Charlie. Gain on held for sale. What workings was that?
Workings 9.
Held for trading. Workings 9. How much? That gain was added, so what do? We subtract it, right?
Yeah.
That's it. You said what? What are you saying?
I can't find the shop associate profit.
We work it out.
I can't find this.
No workings.
Workings what?
5.
5. Dividend.
Yes. But we computed we had share of profit.
Can't you see share of associate profit in the income statement?
Share of profit.
I can't see you.
Then your question is wrong. So we go changes in working capital. You can't see share of associate profit in income statement when we have just used it. Yes, what are the things? First, inventory. What happened to inventory? Give me that workings there. Did it increase or decrease? Workings 10 to 11 or so, whatever. Inventory, what happens? Decrease or increase?
It decreased.
So decrease in inventory. How much was it? That was workings what?
Workings
12. How much?
600.
2,600. When there is decrease in inventory, do we add or subtract? Do we add or subtract?
We add.
Okay, what's the next item?
Receivables.
Did it decrease or increase?
It increased.
So increase in receivables. Still workings 12. How much?
Subtract.
How much?
500.
Then, what happened to payables?
It's reduced.
So, meaning what?
Subtract.
Because we were paying workings 12. How much? 200 or 2,000?
2,000.
Give me the arithmetic, and that gives us the total cash inflows from operating activities.
By is 1.
Mm-hmm. 16. Did you add this?
Yeah.
Everything?
Yes.
Because I'm not supposed to get that. We forget a very key thing about the adjustments. Depreciation, Owen. 1,800. So go for it. 3490. I'm not supposed to have that. Someone should confirm for me.
90. Still not correct.
I'm not supposed to have that. Someone should confirm for me. Tax paid. Is that the same figure you are getting?
Sure. He said we should bring the 50/50, bring it in subtract so that the examiner will know below.
Who said that? I didn't say that.
He said that we have to bring it, although it's cancelling as well, we have to bring it. Yeah.
I'm not bringing it in my solution
Sure, why are you going to bring it? Why?
because I don't want to bring it.
You bring it for the sake of the student. You know, yeah, I don't know. I'll forget to answer it.
3490. Okay. Tax paid workings what? How much?
900.
Outflow. So give me the difference and that'll give us the net cash flow from operating activities.
2590.
25. Positive.
Yeah.
Now, after that, where do we go? Investing activities. Sorry. Cash flow from investing activities. So what do we have? What were the things we mentioned supposed to be here? Acquisition of property, plant, and equipment, right?
Yes.
That's working what?
6.
Okay. I'm still following this order, assuming I have workings too. So, acquisition of property, plant, and equipment, working 6. How much? How much? And that's an outflow. What else did we say is supposed to come here? The dividend we receive from the associates is an investment, right? So the dividend that we receive from associates must come. You remember we calculated that?
Yes.
Workings.
5.
How much?
300.
300. Then the acquisition, the money we paid on the acquisition.
What about the dividend we pay?
The dividend we paid, we could have treated it here, but from the look of things, I want to treat it under financing activities. Are you getting it? Acquisition of SAC.
The amount we pay.
Yeah, working 12. The net, 260, right? The net, that's working.
Is there another way around not straightforward that
Which other way?
so we can use the main consideration then?
Then you go and add That what if you forget
This one, I don't really get
the
the
concept?
rationale. Yes.
No, this is rather more rational. The rationale is that you pay me 100 cedis, you get it, to acquire my laptop. But when I give you my laptop, in my laptop bag, there is 20 cedis inside. So how much did you actually pay me? 80 cedis. Rather than bringing this 460 here, and you forgetting that I need to add the 200 to the cash and cash equivalent at the end of the year.
So
I don't know if you get the workings.
do the adjustment and then bring the next.
I don't know. I don't know if you will remember that me do end the one. What is the cash of the sub? But say we three will say, and say me next consideration. It is simpler to remember.
And the cash of the group, we have does not include the sub.
Which cash? Where's my question?
Sorry. Hey,
Where is my question? Yeah, I'm listening.
so we have, it's not okay.
Okay, it's not okay, so talk. We are listening.
Okay, so okay. So the cash at the beginning is 4,100.
So you can't prepare cash and cash equivalent accounts because that will mean that all the things you've acquired and all the money you've received, you need to adjust all up. But this cash relates to the subsidiary. It's the money that is coming in. So the best alternative is if I'm paying you and I'm receiving cash from you, then technically how much am I incurring? That's safer. Are you getting it? So let this one be ingrained in your mind rather. So what else? Is that all? Is this all about the acquisitions? You sure about that? Any other thing?
So why are we not taking the 90% of the subsidiary assets?
Which assets?
You said Scanners Limited, I have 90% of the owner shares of
Mm-hmm.
AT Limited.
Mm-hmm.
So looking at the fair value of the subsidiary assets,
Yeah.
and then when we come to the group accounts, do we take the total?
No. You know when we are preparing, this is cash flow. But if we are preparing even financial position, you know we don't take percentage. We bring the asset because we have control. Are you getting the ideas? If it is yes. If it is when we are valuing NCI, as you saw the NCI, we took 10% on their net assets. So here, no percentage. So let's go for it. Give me total here. That will be net cash flow from investment activities. Positive. Last one. Cash flow from financing activities. Let's go for it. The first thing is issue of share. What was the workings for that? What's the workings for that? 8. Workings 8. How much was it? 3. You sure about that? Okay. Next. Dividend paid to Ebazi, to the shareholders. Workings. How much? Dividend to NCI. Workings. How much? Gladys. Then repayment of loan. How much was it?
4,000.
4,000. Workings. Is that all? dealt with everything in level. Yeah. So let's go for it. Give me total answer. Net cash flow from financing activities. For positive or negative? So let's get this.
Sorry. 3130. 3130. Sorry.
All right.
Negative.
So negative.
Yes.
So this will give us the net cash flow or the net decrease or increase in whatever. Let's see if it is negative. If it is negative, it will be decrease. If it is positive, it will be increase. Positive or negative? So net decrease in cash and cash equivalent. Negative 27.
Alright.
Then we bring cash and cash equivalent at the start of the year. At the beginning, how much?
4,100. That's balance.
And cash equivalent at the end.
1,000.
That's it. That's it. So we are done. 20 marks.
3 hours.
36 minutes.
3 hours.
36 minutes. Oh. It's a 36 minutes question.
That's my first one we've done in class. My regards to you.
So that's it. Any questions? Maybe